Good morning. I want us to go through some of the trades I took this week, and I want to measure on the losses I took this week, and I want to see if there's actually something that I might have missed. I'm focusing on the losses here. This video is specifically about the losses that were made and the mindset that went into it, the reasoning and the way I analyzed the markets and how I should have done better and and things that maybe I missed and the mistakes that I made, the recklessness that was there. So I'll just go. I think it's going to be a very short video, and we can go through this. I'm going to start on the 1 hour. These are the trades. There are 1, 2, 3, and 4. So early in the week, I had analyzed this chart, and we had clearly stated that we are now going bullish due to this market structure shift here. We can see it made a higher high and a higher low. It mitigated these fair value gaps on the 1 hour, and we were looking for continuation in the 1 hour and the 15 minutes. So during this time, I think I'll just maybe use this so that we can look at it from, so that it's a bit clear. Let me just, what happened. So I was looking at this, and I clearly knew we are buying. Okay, we are bullish, and we mitigated this. So it mitigated this, and we continued. And during the 15 minutes, I was waiting for, this was my indication, this was my correction. So this was the range that I was anticipating for it to pull back and then resume the trend. And here the mistake I made was assuming, let me get rid of this first so that we can see. The mistake I made here was that during the New York, you see, the whole day it was trending upwards, okay? And here I decided to take this order block and use it as my entry, targeting the next high. That is a correct way of analyzing the market and a very good entry. But the problem here that I've noticed on and on again is that during the New York the PM session, this PM session, it normally goes further than expected. It pulls back further than expected. So it is best, and it is very, very paramount that you use these lows as your stop loss, these lows, yeah. So I should not have used this one, because New York PM tends to test the markets, and it's very, very slow, it's chaotic and stuff like that. So if it was, the entry was during maybe London or New York, that this entry would have been a perfect entry. But because it was the PM session, the market is closing and people are not on the desk, like it gets a bit choppy, and it's best to just, for your safety and for this not to happen, because it feels very, very bad when it comes, hits your stop loss and then continues. So I should have used this, of which this is a very, very high stop, a very high stop loss, of which if you're trading the PM, it's best to, I'm thinking maybe if I'm trading the PM session, I should either put the stop loss on a swing low or a swing high, or miss out on the trade and look for an entry the following day during London, Asia, or New York. Okay, so here this should have been my stop loss, and instead of this, and you see it came. You can see how the market played out. See, it came, took me out, and then hit TP. Okay, so that was the first mistake I made, of which, knowing that the trend and everything, the analysis was perfect, it's just, it's okay, we learn and we move on. The next trade was, let me pause this, was these two trades. And let me just here. Okay, I don't know why it's just, let's give it a minute. Okay, this next trade, these two trades, I think, okay, we were bullish on this day. I felt I was panicking. I think it was FOMO. It was fear of missing out. It is 100% fear of missing out. And this is where psychology comes in and the mindset comes in, because you're supposed, like, I know there are many opportunities, and I think this is where now I need to start talking to myself and telling myself that even if I feel like I'm missing out, maybe it's best to actually miss the trade instead of just entering and getting losses. Because you can see, like here, I knew we were very, very bullish, and I knew that on the Euro USD and DXY, we had already taken this prior week high. Okay, so there was a very high potential of a reversal, and then, you know, it's Wednesday, there was a very high potential of a reversal on this day. And so here, this was the current range. On the 1 hour, this was our current range. Okay, this here. Okay. This was our current range. And if we came down to this, we took out this, I would consider this a market structure shift. Okay, and on the 15 minutes, you see, on the 15 minutes, I knew, can you imagine, we went, Asia was not even ranging, it was trending. London was also trending. So in my mind, I should have known that New York was either going to consolidate or it was going to reverse. So this is a trade that I shouldn't have taken at all. Okay, and despite, because, you know, I saw we've been trending and we've just made a market structure shift on the 15 minutes, so I should use this order block, enter, and then, you know, catch the next high. And another red flag that I should have seen is the risk reward. Look, literally 1:1. Is that even a trade worth even taking? It's not even worth taking it. Okay, but I understand it was just because I felt like, oh, the market has just left without me. I didn't find like there was an entry here that I should have taken around, I think around here or here, I should have taken to be in these moves, and the fact that I missed out gave me the FOMO, and you see, it resulted to a loss. So this was just FOMO, because I shouldn't have even been taking this. And then later I told myself, if it has disrespected this, it must respect this order block, you know. And then here, another thing I should have actually just thought to myself is, if I'm using, like, this should not even have been considered on the 15 minutes, because you see, I was using the 15 minutes, and you can see, let me show you what I mean. This is our low, high, higher low, higher high, higher low, higher high. Okay, let me just mark the path. Higher low, higher high, higher low, higher high, higher low, higher high. Okay, so the fact that this one didn't work out, and the fact that I thought that this would be an order block that would have been respected should have been, it doesn't even make sense, because if I was assuming the trend was still bullish, but you see here the trend actually changes on the 15 minutes. We make a lower low, we make a lower high, we make a lower low, a lower high, lower low, you see? So this is not even something I should have even considered, because already the trend has changed. It's changed here. Once it made a lower low, that's when it changed. So I shouldn't even have been considering this. Okay, so this is another trade that the mindset or psychology, I don't know. Anyway, so I just ignored this because I really wanted to jump in the trade. Let's just say it's FOMO, fear of missing out. Yeah, I think that's what I need to work on. FOMO and maybe greed. Is this because I would think this is greed. This one was out of fear of missing out and maybe greed, because imagine I didn't even see the 1:1 ratio. Like that didn't even make me anyway. I am human and it's okay. Like, it's okay. So the fact that this changed, the market structure shift changed, I should have been out to just observe whether the range, this range on the 4-hour would actually hold, and then maybe look for an entry. If it goes up, I should have been looking for a buy, another buy after the market structure shift on the 15 minutes, like when it starts aligning or something like that. Okay, so that is that. And actually these are actually psychological. Most of them are mostly psychological. I think I'm using my emotion mind too much than the logic mind. So this is another trade also. We can just leave so that okay, this is the other trade. This other trade, let's see. So on the 1 hour, we made a lower low. Okay, and this was my first indication that the market structure on the 1 hour has shifted. So if it has shifted, what is our range? This is our range. This is the low and the high we are looking at. So if we are currently bearish, you see, we are bearish because we broke this low. If we are currently bearish here, I think there was a fair value gap around here. There was a tiny fair value gap. How was it? It was around here. There was a fair value gap around there. So on this trade, I considered this as market structure shift. This. Instead, I consider, because this is higher than this is higher than this, like it's internally, it's making higher highs, higher lows, higher low, higher high. Okay, so I assumed, again with the assumption, that instead of looking at the market structure, I just assumed that price is going to go for prior week high, which is around here or something like that. And here, that is the mistake I made, because I should have known that this range, this current range, is the range that we are actually focusing on. We are bearish, we are selling, we are not buying. And in as much as it's making these higher highs, These are called the microstructures within a macro range. This is a macro because it's the bigger one, it's the main range, and these are micro ranges. And these ranges, you can go on the 15 minutes and see them. On the 15 minutes, they are making higher highs, and I think that's what confused me, because you see, in the 15 minutes, we are making higher highs, higher high, another higher high, another higher high. So because the 15 minutes was bullish, it overrided the bearish market structure on the 1 hour, which is, that shouldn't happen. That's not how you look at the market. The higher time frames always have a bigger impact. Like the higher time frames always hold the true meaning of the market. They hold more value, they hold more information and respectable areas of interest. So here, this should have, in the first place, I shouldn't have been taking longs here, because on the higher time frame, on the one hour, we are already bearish. And I think it was because of these moves that I missed. Yeah, and it's okay, because I think I need to study the psychology part a little bit more, or maybe have clear rules. I need to write the rules down so that these things don't happen, so that I don't use my emotion mind more than my logic mind. Okay. And here I assumed this is of which this is actually our 15 minutes range. It makes a lot of sense. It is our 15 minutes range, and it was okay. It would have been okay if the market was bullish on the 1 hour. It should have been okay. This trade, the entries and everything were okay. But because the 1 hour was already, we were already at a fair value gap. This is the fair value gap of the 1 hour, and we were already bearish on the 1 hour. This was just a pullback, a minor pullback, making microstructures, and for it to get here and then resume with the trend. So that was that. So I think I entered here, and it took me out around near New York, and this was just a rookie mistake, and this shouldn't happen again. So we learn with that. And because you see, even here, it already made, even on my entry, actually, let's look at this through. Let me just hide this. And this, let me even hide this as well. Look, on the 1 hour, okay, another thing that should have been a red flag again. See, this one, it made a high. This is the range that I was looking at, and my entry around here. So this one being the range, it makes another high, right? It makes another high, meaning this is a higher high, higher low. This is the trend. It's just that from here, this one, this is a low that was created, this is a high that was created, and this is a low. So this one should have been a major giveaway. Like, market structure shift on the 15 minutes has shifted. Get out of the market. Don't even enter the trade. You see, like, there are always clues. I don't know why the mind just ignores them. They are always there. I see them. You see, it doesn't even make sense. Anyway, this should have been a giveaway that I shouldn't even be considered. The moment this candle closed below here, this should have been a giveaway that you shouldn't even be on this trade. Just get out and sit down and, go touch grass. Anyway, that happened. So let me return my drawings. Anyway, So that's what I'm saying. Like, these are just mistakes, psychological mistakes, because this is not even a strategy, an issue with the strategy. This is an issue with the mind. And see, the moment it closed, even if I was in the trade, I should have either waited for this, a small positive, get out, you know, because the market always makes an indication correction, and then so the moment I should have maybe waited for a correction, the moment it goes positive, get out. But because I just wanted to be in the trade, now it has cost me how many, this is what, this is around 4%. Yes, around 4%, and yet it's not the strategy, because I analyzed the market very well. I knew what was needed of me in the previous videos. If you watched the previous videos, I'm sure you got some insight on the strategy, on where the market is going and what it is doing. Like, I don't know what happened, honestly. Anyway, today now, so we are here today. If we do go above this on the 1 hour, we are turning bullish. That's it. Okay, but here we were supposed, here there was a fair value gap, so we are still watching the market. You shouldn't be in the market right now. You shouldn't be considering an entry of the market right now. Yes, I think I should also make another video on maybe the wins and where the entries should have been. I don't know. Maybe I should, maybe I shouldn't. But anyway, thank you for keeping me company, and thank you for your time. And I hope you are learning something, and I hope to do this journey with you guys, and stay blessed. And if this is something you want to see and maybe know more about, maybe you can consider subscribing and or reaching out, or so that we can just move together. And if there's anything that is unclear, please make sure you can write me, or you can just write something. Okay, thank you, and see you next week for our weekly review and our everyday analysis. Stay blessed.